Hello, I'm David Cassidy with the Midweek Market Update. Today, Wednesday, the 4th of November. Although the polls and news reports over recent weeks have suggested that it was Democrat Joe Biden's election to lose, we have warned that the US presidential election was likely to be tight. And this is simply because, as perhaps with voting Conservative or for Brexit here in the UK, there are potentially lots of Americans that just don't want to admit to voting for Donald Trump. And as a consequence of this, the election could potentially be contested and decided in the courts. Now, while we are hopeful we will get some sort of unofficial election outcome results sooner rather than later, unfortunately, there is a very good chance that the outcome of this election will not be known for days, if not weeks. And as such, equity market volatility is likely to remain elevated. In fact, in the UK, we have seen the FTSE 100 index swing between gains and losses several times today in 160 point, which is over 2.7% trading range. However, it is worth highlighting that while the presidential election understandably gets all the attention, the Senate election is just as, if not more, important. And with 35 Senate seats up for grabs, we've been focusing our attention on these results. So far, the Republicans appear to be on course to retain control of the Senate, and this means we will see either a status quo if Donald Trump wins 4 more years, or if Joe Biden wins, his stimulus, tax and regulation plans are likely now to be restrained. And as a consequence, we believe that this would be positive for financial markets, both equities and bonds, once all of the presidential election uncertainty is out of the way, because Joe Biden's higher taxes and regulation would have been a significant headwind for equity markets, while his big stimulus package would have been a negative for bond markets. While it is easy, and we can't deny it's very easy to get distracted by all of the commentary of the election results, this week would have been important even without the presidential election. Because so far this week, we've had both the US ISM, Institute for Supply Management, and the Eurozone PMI, Purchasing Managers Index, data both come in much stronger than expected. In fact, the USA ISM data would suggest that the US economy doesn't need any further stimulus, as the reading came in at 59.3, while new orders jumped from 60.2 to 67.9, its highest level since January 2004. Furthermore, employment rose to 53.2, its first reading above 50 since July 2019. 50, remember, is the line separating expansion and contraction. And so these readings not only show that the US economy continues to expand, but the expansion is accelerating. Additionally, tomorrow, Thursday, the 5th of November, remember, we have monetary policy meetings from both the Federal Reserve and the Bank of England.